after a rough couple of weeks that saw tech get beat down like a rabid dog, that saw investors fearing potential inflation and interest rate increases down the line, and leading up to the eventual stimulus passage this weekend, well, now traders are coming from far and from wide with one simple question. Well, in this video, I've got my cat lady mug. Trust me, it's not mine. But in this video, we're going to be talking about the top 3 stocks for this week. But first, of course, we want to go ahead and talk about what happened last week and some of the updates on last week's plays. Okay, so pretty much every major play was down the last couple of weeks. But short-term plays really outshined. You look at UVXY, pretty nice pop mid last week. Same thing with SQQQ that shorts the NASDAQ. Make sure if you see volatility in the market, you think, inverse ETFs, baby. Okay, next I want to talk about eyes. And by the way, my eyes are up here. Don't keep looking at that ravishing like button down there. Well, you can look at it while you're clicking it, but just make sure you're looking at my eyes for most of the video, folks. But jokes aside, eyes was one of our big winners from last week. So eyes we briefed on at about 5:59 a.m. as a morning catalyst on Friday. It ended up running from 219 to 989. This was something that really blew all of us away, and it was really nice to see. But we briefed on it because they received FDA approval for their retinal prosthesis system. This is a system that helps repair vision loss amongst some blind folks by using a miniature eye implant with a patient-worn glasses camera. But anyways, FDA approvals are sort of the mother of all catalysts, especially for biotech plays. That's because new health products have to go through phased trials, and then they have to go through an FDA approval stage in order to actually get to the market. So that FDA approval stage is the final stage where we're like, okay, it's time to mass produce this and mass market this. And usually when you have an FDA approval that hasn't been largely pre-factored in, you see a huge run like this. But of course, with catalyst plays, you want to get in and out. It's very unlikely that it sustains such a huge run. But still, it's important to note that a lot of our plays did not run like this last week or the week before that. But still, tracking catalysts like this are important because then you can diversify some of your trading. Okay, next, Rocket. So we briefed on Rocket this pre-market before the push. This was a huge candidate for a short squeeze because of the high short interest, lots of social sentiment boosts from the likes of Wall Street bets, and having a strong history of being a previous multi-runner. While this was a huge winner, a big takeaway is that you shouldn't have the proclivity to aimlessly hold your runners. During overall bull runs, you may be able to get away with sloppy trading, but you sure as heck won't get away with it during more tense conditions, during bear markets, during corrections. You won't get away with it. What that means is you just have to make sure that you're having concrete entry and exit plans with these short-term plays. Okay, Mara, lovely Mara. Now, Mara is back at its previous support level after a few weeks of volatility. Of course, Mara is a Bitcoin miner, and Bitcoin held up pretty damn well over this weekend. Despite stimulus passing, which a lot of people are saying if stimulus passes and it's a huge amount, then you're going to see more inflation concerns. So the fact that Bitcoin held up well over the weekend despite stimulus passing tells us either one or two things. Number one, Bitcoin is acting as a hedge against inflation, or number two, growth investors are starting to care less about rising interest rates. Nonetheless, though, this positive development in Bitcoin is good. The last recap I want to talk about is NEO. So in terms of the bloody battlefield that we've had over the last couple of weeks, NEO, in my opinion, is one of the only ones that has actually earned a little bit of this downtrend. We went ahead and downgraded this one last week because of their chip shortage, and their chip shortage should set them back a little bit in terms of their production and delivery. So that's why we downgraded it. It wasn't a huge downgrade, but I think that it would be a little bit ridiculous for me not to downgrade this one. Okay, folks, and before we get into this week's picks, the one thing I want to talk about is I've gotten a lot of questions along the lines of, Charlie, I did all my due diligence on X stock or blank stock, and I found that it's a great company. Everything's going for it. The chart makes sense. It's cheap, blah, 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 but it just keeps going down. I bought the dip only to find it dip lower. Well, the truth is there's no such thing as too healthy a company to crash during a overall market panic. It doesn't matter how good the company is, how good the future looks, how good the catalysts are. 99% of the time, if your stock is in a sector that overall is cooling off, then it's going to cool off with that sector. But the flip side is that if you've identified a really, really good company, then when the sector starts acting rational again, then you're going to expect a much higher increase. The key is doubling down on your own due diligence so you feel confident in your position and then riding out the storm. If you have the capital, you can average down. If you don't have the capital, then you can feel confident in your position that you took and just weather the storm. Anyways, folks, the only thing that I ask in return for this video is that you hit that ravishing like button, and also don't forget to subscribe. Okay, folks, so now the first stock is actually a recovery play. Now, I've been pretty slow to add a lot of recovery plays to our price targets list, and the reason is because a lot of the recovery plays have had a awful 2020 and early 2021, obviously by the nature of being recovery plays, but they've already pretty much gotten back to pre-COVID levels. So it's like they had a terrible time and then they're trading at or above pre-COVID levels. So I've had a really hard time making any sort of rational argument that something that is trading way above pre-COVID highs but hasn't had any business in all of 2020 or 2021 is a good deal. However, BA Boeing is one that is well below pre-COVID highs. And it's a play that we talked about way down 10 months ago when it was trading at just 130 a share. Back then we made the argument for this to be a clear winner once we leave the pandemic. That's sort of a monkey argument. Everybody knows that BA was going to come back after the pandemic. But the crux was, how long would it take? Back then I said if you were willing to buy it and then hold, and you didn't expect it to be a fast money play, that this would be a good buy back then. That was definitely the case. It was definitely one of the slower plays in 2020 and 2021, but it's definitely been picking up. Anyways, I've hesitated to put a price target on it, and I finally put a price target on it of $300. To me, this is one of the last obvious value recovery plays that is well below long-term highs. Also true that it's worth diversifying outside of just tech innovative growth sectors into plays like this as well. And if we see future rotations into recovery plays, this one should be a huge winner. We're even trading well below certain points that we reached mid-pandemic. Now we have a vaccine, we have a reasonable timescale for when demand is going to start coming back for these plays. And to me, this seems like an obvious buy. Also be adding some of the retail recovery plays tonight to the price targets tab. So make sure if you're in ZipTrader, you keep an eye for that. If you're not in ZipTrader, you will be doing some breakdowns this week as well. I want to make sure everybody is aware of a lot of these opportunities with the recovery plays. Okay, next. So bad couple of weeks for PLTR to say the least. That's just in terms of the chart, not in terms of what they're doing. A lot of people confuse the company, what they're doing, the value they're providing with the share price, and that's a complete mistake. PLTR just announced they will be teaming up with Amazon Web Services. AWS, or Amazon Web Services, is the most popular cloud service provider in the world. Now, AWS has already been working with PLTR for some time on some projects, but this is a huge step up. This deal is a huge escalation because now every Amazon Web Service customer will have access to PLTR's platform. Now, there are over 1 million users who use AWS, including some of the biggest websites in the world like Netflix, Twitch, LinkedIn, Facebook, Twitter, and so forth. Well, the fact is that now Palantir software will be available for all users. A huge step forward for the mainstream adoption of the company's software. You're basically introducing Palantir for the first time to many companies, some of which actually may end up contracting outside of AWS in the future. So this, in my opinion, is a big win for PLTR. In terms of how this would impact PLTR's price, well, I'm doubtful that it would impact it at all if we're still in a panic. When it comes to fear in the market, there is no such thing as a catalyst that is too good to be immune to fear. But my point is that this does solidify PLTR's value once this panic is over. This is yet another win to add to PLTR's long list of wins, and I think this is one of the most exciting. Okay, next, iPod and iPof. So I like to loop these two together because these are two sister SPAC plays, but both are going to have their own individual SPAC partner. And they've both dropped following a less conducive environment for SPAC and speculative plays in general. However, at the current trading price, they are factoring in very little enthusiasm. SPACs have a floor at $10. If you look at big sister play IPOE, this is traded well above its SPAC floor despite the sell-off, indicating that if iPod and iPof choose even half as good of a partner as IPOE, then they are still undervalued at the current trading price. Okay, quick bonus, Clove. So Clove had gotten beaten down on a short seller report, and then the overall market dump just completely attacked Clove. But if you're somebody who's interested or are in Clove already, I want you to take some time to read this article that somebody wrote. I'm going to put a link in the description below, but this article is called Why Your Stock is Always Red. And this isn't an article that's about Clove specifically, but I want you to read it and then think about what's happening with Clove. After reading it, take some time to look into the PR that's come out on Clove both before the overall crash and after the overall crash, and then really dig and look for some positive catalysts that were thrown under the rug the last couple of weeks. Think about some of the negative catalysts that came from anonymous sources that were really amplified over the last couple of weeks. There's an interesting piece that said nobody reputable would ever work with Clove. People won't touch Clove with a 6-foot pole. And then you had copy and paste fear-mongering comments pretty much all over social media. At the same time of all this coverage, we saw just last week on March 4th, Clover won a 5-year grant from the esteemed NIH, the National Institute of Health. But wait, that can't be true, Charlie. Somebody on the Weeble comment section said this has to go to 0. Somebody on StockTwits or Reddit said that this has to go to 0. I'm making fun, but still, the amount of bad coverage and panicking that I've seen with this stock has been really just completely ridiculous. But at the same time, I don't want you to turn your brains off and blindly trust me. ZipTrader is a place that we encourage you to question everything you hear, not just from the rest of the media, the rest of financial media, but also from me. Not just because people can be fallible and wrong and biased, but also because it helps you learn. Even if I was perfect and I knew everything and I was always right, which is definitely not the case, it still wouldn't be super helpful for you to blindly trust me. So take some time to actually question everything you hear. That way, not only can you learn, you'll also be more confident in all of your decisions. Take some time to read this article on Why Your Stock is Always Red, look at the actual numbers that Clove is doing, some of its coverage, and think about what is going on with Clove. Maybe you agree with me, maybe you don't, and that's totally fine. Welcome to the stock market. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you're looking to learn how to trade with access to our private chat and daily morning briefings, I'll put the link to ZipTrader U below. If you're wondering what broker to trade these stocks on, well, we like to send new traders over to Webull if you need to trade in the pre-market and the after hours, which everybody needs to trade in those times. I'll put the link below, but they are a great platform and I think they're worth checking out. Anyways, folks, have a great day and I'll see you in the next video.